TheoTrade. This is Don Kaufman. September 7th, 2022, 19 minutes to go to the cash close here on this Wednesday afternoon. An absolute rip your face off rally. But the big question right now is, can the rally survive the ECB? We're going to find out real quick here, which is, ECB coming to a theater near you tomorrow morning before the cash open. European Central Bank is possibly going to jam rates 75 basis points higher. Again, the ECB announcement will also, of course, be met with, not just an announcement, but we're going to hear from the one, the only Christine Lagarde thereafter, as they're going to do a bit of a conference. In addition to it, the compound risks, we even have Jerome Powell speaking to a degree tomorrow morning. Listen, push all of that aside for just a moment. Let's actually get a read on markets. The place that I want to start with this evening's video is right here under Visualize on thinkorswim. Why? Because the correlation right now is through the roof. Now, you can take this, a couple of different ways. The way that I look at a really high correlation, effectively, I'm looking at the S&P 100. And again, kind of want to elaborate upon this to a degree, because what this means to me, again, inside of the S&P 100, what do you have right now? I mean, this is kind of quintessential. Every stock is basically up, right? Anything today that's down is probably going to be energy or energy related. And it is, ConocoPhillips and Chevron, and kind of cruise through some of the usual suspects, FedEx, but, there's some news there. ExxonMobil. Again, for the most part, if you're in the S&P 100, or better yet, even in the S&P 500, you're trading higher. The reason that that's important to me is that at that point, the only thing in charge of the S&P is, meaning that order flow is being driven by the S&P 500 futures contract. So as the futures move, so goes the marketplace. Okay, that's at a time like this when you see almost full-blown correlation to the upside or to the downside. Listen, there's not a lot to look at on the screen. Like, you don't have to go, oh wow, look at what Meta's doing, and oh my, Google. Okay, push it all aside for just a second. If the S&Ps start to turn back around, see some sell side activity, it's going to affect everybody across the board. Again, that's what correlation is about. All right. On another note here, in stark contrast to the trade that we've seen lately, there was a big bond rally. And the bonds, normally you wouldn't hop on here, talk about the S&P 500, talk about like correlation coefficient, and then jump to bonds. But the bonds, in my opinion, having a little bit of a relief rally, ultimately just was like a match to ignite the Nasdaq to the upside. So again, for a moment, forget that individual stocks even exist, because it doesn't matter. If you take a look at the bonds and the bonds rally back, again, it's, growth stocks and so forth. Nasdaq just took off to the upside. And you're seeing just that. If you take a look at the Nasdaq more appropriately, let's go to the QQQ. Let's apply auto expected moves. This is the way the option market kind of depicts risk, for the week. And what you're looking at over here is, well, we're more than halfway home to the upper edge of the expected move. But a reminder here, with all due respect, we only have a 4-day trading week. This kind of move, like a 70-point move, you're like, it's unprecedented, but it's not. I mean, the S&Ps were actually pricing in about a $94 move in the week. The QQQ, you're looking, it's just more than halfway home to the upper edge of the expected move. But again, a huge amount of this, like, I'd like to tell you that this rally, it's going to be all beautiful from here. But the problem is, this ECB announcement tomorrow, it's going to throw a couple of curveballs in there. Allow me to display a little bit more deeply. If I cruise to the SPX, and again, we're focusing on broader markets right now because, as I said, everything is correlated. Like, I could sit here and, talk to them blue in the face, like about energy stocks, but it's pretty clear. Energy is down about 1%. Why? Oil's getting annihilated. Oil's down some 5%. I don't necessarily think that bodes well for the economy moving forward, because oil being down at this point, I think is more of like economic slowdown. but push it aside. As I said, the S&Ps are up. Individual stocks don't matter because everything's correlated. The bonds, okay, getting a relief rally ignited, if you will, the Nasdaq to the upside. So why am I now looking at the SPX? Well, the SPX, its expected move, as I said a moment ago, is about $94. And I want to clarify something for just a moment over here. When I talk about a $94 expected move, hey, listen, that's $94 to the upside, $94 to the downside. Here, we're actually more than halfway home to the upper edge of the expected move. So where is the upper edge of the expected move? And it's somewhere right around 40.20. Now, if you recognize that in most weeks, we actually do tag the upper and or lower edge of an expected move. In fact, if you look back to almost all recent weeks of trade, almost every single recent week of trade, not only did we tag, the upper or lower edge of the expected move, we actually had some significant breaches of expected move. I mean, really, there's only 1 week. You got to come right back here. There's only 1 week, which is in early August, where we didn't breach the edge of an expected move. So again, you have to have a lot of respect for this. We're either coming up to this 40.20, and that would obviously be a positive reaction to the ECB, or things are going to get downright hideous. Let's get crazy. Talk about 38.30 to the downside. But the other reason I'm pulling up the SPX is I want to show you, will the rally hold and can the rally survive the ECB? Listen, that's not just me talking. Take a look at the implied volatilities and the stance literally for, the next 24 to 48 hours of trade. So here happens to be, right there is none other than Thursday's implied volatility. We're sitting right around 26.63. And if you look at Friday's volatility, it drops to 25.59. It's almost like there's, earnings. So when the implied volatility is higher on a Thursday than it is on a Friday, what is it implying? It's implying more risk on Thursday. And again, that vol wouldn't be sitting at 26% if the ECB announcement wasn't going to hold some weight. Obviously, a little Jerome Powell thrown in there, isn't helping, in terms of implied volatility. So tomorrow's trading session is fairly critical. Again, any speech from Christine Lagarde is also fairly critical, who's again come out screaming hawkish. I mean, when else in history do we have concurrent 75 basis point hikes, not just here in the U.S., but all over the world? I mean, again, that is something that's just overwhelming, and that's not supposed to be a bearish connotation. I think that it's actually probably priced in, if you will, that a 75 basis point hike is coming from the ECB. All right, another factor to actually look at. So today you got a little bit of relief, and again, that relief, in my opinion, came from the fact that the bonds, they rallied. If the bonds rallied, again, it ignited the Nasdaq to the upside. Okay. But if it wasn't for the Nasdaq, this entire marketplace wouldn't have done anything. Why do I say that? Because the energy sector really couldn't get out of its own way today. The energy sector, don't discount, the ability for the energy sector to actually weigh on the entire S&P. The only reason the energy sector did not weigh on the S&Ps today is because the bonds actually rallied. The bonds rallying, again, as I said, took the Nasdaq to the upside. In addition to it, this is one of the first and only days recently that we've seen big momentum shift inside of the US dollar. Now, I look at the US dollar as it's almost, if you will, like the new VIX. So the US dollar has been on an absolute rip lately to the upside. The pullback in the US dollar today can actually signify, hey, maybe there's a little bit, just a little hint of less risk. As I said, though, all of that can change tomorrow, and it can change on a dime. Volatilities are down. Significantly? No, not that significant. But the fact that we've had almost a 2% rally inside of the S&Ps, hey, all right, so volatility came off. It should come off with an almost 2% rally. Down to the bottom of the screen over here, though, looking at some of the other major volatility indicators, here's one where it really did get crushed. The VVIX down big, short-term volatility. One thing worth noting is the 9-day VIX is actually falling by the tune of about 10%. These are fairly significant moves. So at this point, I think a lot of traders are actually buying into the idea okay, that this rally has actually got teeth and the rally is going to grip hold. Not so fast. Cruise over right now, okay, initially to a 30-day 1-hour chart. And what I want to present to you on this 30-day 1-hour chart, and I'm actually going to go ahead and close up that left side, is that for the most part, listen, we've seen this movie before, okay? We just broke right off, okay, the 39.31, and that has been, and I've mentioned this on almost every video I've done recently, okay? Here's our 39.31. We broke off to the upside. We saw the volume spike. We're not out of the woods just yet. 39.31 is a pivotal level. If we get sucked back there tomorrow, be afraid, because again, I said this very frankly on the weekend video, and I'll say it again right now. Okay, I got nothing under 39.31. If we start looking at the 180-day 4-hour, okay, 180-day 4-hour, there is an absolutely vicious trade that occurs under 39.31. Okay, I mean this right down here is some violence in trade. We're not completely clear. Now, getting pulled back to 39.31 would be the first step. But again, this is a nice beginning to a rally. And if you're listening right now and you're kind of thinking, you're like, well, is Don bullish or bearish? Well, listen, I speak with my positions. I've been still carrying a significant bearish delta overall. I mean, I don't mind saying that. Well, we're rallying right now. Listen, these are positions that have been on for a significant period of time, okay? Clearly, if you look at the S&Ps over the last 180 days, it has worked swimmingly. I mean, we're coming off 4,800. Here we are trading, 39 and change, maybe come up to 4,000. I don't know, let's get crazy. But the point that I'm trying to make with this, okay, tomorrow is just an absolute binary announcement. This is one where even if I knew what the ECB was going to do, I still don't think I can actually make a trade off of it. Because in a binary announcement like this, I mean, hey, okay, all I can listen to is what the bond market is telling me. All I can listen to is what the dollar, the SPX, okay? None of them have made substantial opposing moves, meaning that, come on, the dollar's just a hop, skip, and a jump away, okay, from exploding right back to where it was. So that doesn't leave me warm and fuzzy, right? Okay, if you look at the bond market, okay, is one trading session away from just breaking some of the recent lows of like 131. That's not going to leave me warm and fuzzy. Again, the implied volatility in the SPX is elevated expressly for tomorrow's trading session. Does that leave you warm and fuzzy? No, okay? There's no warm and fuzzy feeling. And, okay, we're just a hair off that 39.31. What's, 50 S&P handles amongst friends? And the answer is, okay, it's absolutely nothing. This is a time where let the market make the move, okay? If we rally, we're going to be able to stage into some very nice, okay, in-out spreads, some short positions. For example, okay, if we rally and we get that vicious, again, this is a rip your face off rally, no question about it. But if we rally, let it happen. You look at stuff like Microsoft gets up to 265, we're going to short it. Okay, we're going to see some just ripping. I mean, listen, there's no question that we're in oversold territory, but nobody cares about oversold when the ECB has an announcement. Okay, but if we rally, let it happen. Let it kind of, play out for the next few days, and we'll talk about jumping in with some bearish in-out spreads. But on the flip side, if we actually start to break down and we break under that 39.31, oh, the premium selling is coming. Okay, that's when we're actually going to step in and be able to really sell some premium, because the VIX will finally, okay, start to just build and explode to the upside. Again, people, we are on the edge. Doesn't matter that we rallied over here. Can we survive? That ECB announcement is going to be a critical threshold. That's really all we have for the remainder of the week. Okay, looking at order flow right now, everything is ambiguous. Look at this as a binary announcement. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.